What's up guys, Michael here with you today, and I trade binary options on the Pocket Option platform. And in the description of this video you'll find a link to my Telegram channel where you can find a lot of useful information about trading. I share trading signals there, and if you text me today on Telegram you will get a really nice link to register on Pocket Option platform where you can give 50% free on your deposit. Today we will trade the Euro and Canada dollar currency pair. I just see a breakdown of horizontal support. You can just catch a small pullback and I will go into it buy for $200. I suggest we talk about support and resistance. After the trend and channels, the next important question is the lines or levels of support and resistance, abbreviated as P and S. So these are conditional lines from which the price bounced earlier. Resistance is the line that is drawn on the top. It resists, does not allow the price to rise. Support, on the contrary, doesn't allow the price to fall below and supports it. Why? This is a matter of psychology as well as the balance of supply and demand. No one willing to buy at such a high price, isn't it? So, I want to ask you why. This is a matter of psychology, yeah. This means that the price doesn't rise above a certain level for the time being until a buyer comes who has seen enough positive news and began to buy it and buy again. The result, the price tends to go up. If the price broke through the line, then the psychology of the market has changed. This is a breakdown, and soon the market will find new support and new resistance. And we close at profit $362. As I see the pullback continues, so you can follow it the same way. I make up an up trade for $200, the magic of round numbers. The psychology behind these lines can also be judged by how often these lines are formed on round numbers such as 10, 20, 35, 50, and especially 100. These psychological levels force traders to buy and sell again and again. Let's say the stock price is 120, it was and approached $100. Many traders start buying despite the fall, being sure that the price will not able to break through such an important psychological barrier with the figure of 100. This often happens. Oh, now the trade closes at profit $358. Now we can say with confidence that the pullback is over. I make a down trade for $200. So what I'm talking about? Magic. As a result, the price reaches an even figure and bounces from it, being able to cope with it. This is how the support line works, which seems to support the price from below. The opposite is also true. When the price rises, reaches 100 and bounces down, this is how the resistance line worked, which resists and doesn't allow the price to move further. I really like the market today. I see the trade closed and gave us a profit of $358. We have a pullback again. I will go into with joy since two trades have gone into a pullback. I make up an up trade for $200, changing roles. So sooner or later the support or resistance level will be broken. The price will be inevitably have enough strength for this. Then their roles change. What was resistance will become support and vice versa. Any price always has its own level of support and resistance. Sometimes there is a so-called false breakdown when the price tried to break through the P and S, but it failed. So many traders trade only on support and resistance levels. This is the most important concept of technical analysis, maybe even the most important. More often the price bounces off a certain price level, the more reliable it is, especially on older frames. However, the breakdown of the level will take place sooner or later, so do not expect that the price will always bounce off the lines like a ball. In addition, important news gives the market such an impulse that it breaks through even the most reliable P&S. Therefore, you should be constantly aware of main economic news, even in order to not to trade at the time of the announcements of, say, economic indicators, the same 3 gold news. How nice to see the profits being added to our account with another trade for $362. Once on the price. Once the price has pulled back, then of course you need to make a down trade again for the same $200. Support and resistance channel, it will be a mistake, among other things, to always wait for an accurate rebound. Usually the price is hanging around the support and resistance lines in a small channel. That is why often instead of lines they draw a channel that covers the shadows of candles that touch the line but couldn't break it. Okay, I've told you everything I wanted for today. Let's wait for a bit for our trade to close. Here it is, plus $356. And I thank you guys for watching this video to the end. Don't forget to subscribe, to like, to comment this video, and don't forget that you can pick up a nice bonus by going to the link to my private Telegram channel. See you next video, and I wish you only successful trading sessions. Goodbye.